Welcome to Keep It Healthy podcast, where we explore how technology is transforming healthcare. I'm your host, Jan Kamiński, co-founder of Momentum. Today, I'm speaking with Jorge Ramos, president of Viver Health, a platform making group health insurance fast and accessible for small businesses. In this episode, we'll explore how Viver is simplifying benefits and why that matters for the future of healthcare access. Can you give us a quick introduction to Viver Health and what problems are you solving and how does your platform work?
Perfect. Yeah. So Viver Health is a group benefit platform where we sell group benefit insurance, which is your health and dental, massage, chiropractor, all of that stuff that supplements our healthcare here in Canada. What we tried to do differently with Viver, why there was a need for it, is we brought technology and really simplified the process, which we'll get into a little more in detail, but basically going from a 6-week process down to 5 minutes. So it's very radical, and we're the first to innovate in this space.
What's your background? Like, what inspired you to launch your own company?
Personally, I've been in the insurance industry 30 years, life insurance, group benefits. And during that time, I'd worked as an advisor. I've worked for insurance companies. I've worked for distribution partners. And, at the time that we created Viver, I was at a distribution partner where we asked our advisors, we had about 800 advisors, and asked them, do you sell group benefits? If yes, why not? And the overwhelming response was that selling group benefits was difficult. It was difficult to get a quote, to gather the information just to get a quote. It takes 1 to 2 weeks to get a quote. Then it takes another month to set up the plan. Ongoing service was an issue. So it was just on and on, layers and layers of difficulty for advisors. And the clients obviously had the same frustration because they just wanted to, hey, how much would this cost? Well, before we give you a quote, we need all this data, all this information, all this work. And it frustrated clients. So we felt there had to be a better way. We didn't find a solution in the market. And that's where we decided, could we actually create our own program? And we went down this path, took about 3 years, and now we're live.
I know it's a pretty traditional business. I mean, like the providers and especially insurance providers and the group benefits industry has been operating in the same way probably for decades. So what are the biggest inefficiencies that you saw in this let's say traditional system?
The idea of Viver was that if we had a large data set as a reference set, we could use that to estimate all the data that we needed. Or most of the data that we needed. So based on that, we had to find a large partner that had data and started to analyze it. From that, then we could determine how little information would we need from the client because we had all of the sample data already. And so that was the basic premise. And so from that, we now were able to say, look, we don't need to collect a full census, meaning all the employees' information, their ages, their marital status, all that, because based on the industry and the size of the company, we could estimate, their demographics. So, and the estimates were fairly accurate so that we could actually work off that data set. And that was it. So we didn't know how far we could push it, but basically we managed to get it down to 3 questions that we ask a new client. And from that alone, and matching that with our own data set, we can actually build the quote and design the plan based on their industry. So that took us from, like I said, weeks and weeks of design down to instant quoting and instant application.
Since you mentioned you have some data in, how accurate is the system compared to like traditional underwriting?
I'll give you an example. So there's a thing called the birthday paradox. Okay, so how many people? I'll ask you a question here. How many people do you need in a room? Okay, how many people do you think you need in a room to guarantee with 99.9% accuracy that 2 people have the same birthday?
Well, a lot probably.
So, most people start going to 150, 200 into the higher numbers, right? But you actually only need 75 people in the room. At 75, you have a 99.9% accuracy of 2 birthdays, okay? Even at 23 people, so 23, you're already at 50-50. So it doesn't require a lot of data to get to a very high accuracy. So we've
Uh-huh.
done a lot of that testing, and our quoting was very, very close to a traditional underwriter based on our own analysis.
And how does the removing demographic details in general, like age or marital status, impact the quoting process?
Well, what it does is simplifies it. We haven't, I wouldn't say we removed it. What we're doing is, instead of asking the client for that data, asking the client for how many employees do you have? What are their ages? When did they start? Are they married? How many? Instead of asking the client for that, we just ask them, what industry are you in? How many employees do you have in total? Based on that, we can extract the reference data from our own data set. So we technically we already know that 50% are male, 60% are married. So we have data. We just haven't needed to ask the client for the data, is the difference. So our pricing is still based on real numbers, if that makes sense.
Yeah, but for example, how does let's say the platform or the system assesses risk without gathering employee health data?
In traditional group, we don't actually ask health questions. We just ask more demographics. Group, the idea of group is having a minimum of 3 employees, and then we don't need to require health questions. We pool them together. And that's the other advantage that we're doing at Viver, is all of our new clients get pooled in with all of our existing clients. So the bigger that pool gets, the less risk overall we take on, right? Because now we're blending out maybe there's one group that's maybe a higher risk. That smaller group gets blended in with our overall pool.
How does it, like in few words, differ from traditional group benefits? Meaning it's just shorter. It's short the pace of, let's say, providing the health benefit, right?
Exactly. It's faster and more intuitive, right? The traditional process is basically collecting and researching a lot of information about the client. We use whatever we have to do that already. So, for smaller clients, so I'll give you an example. For smaller clients, companies that maybe are under 10 employees, they may have not looked into group benefits before, because just asking for a quote was a difficult process. So now the client themselves, the business owner, can go onto our system and actually run their own quote. Or the advisor can go in there and just really quickly, in under a minute, get a quote. So it removes that barrier of, just to get a quote is going to be too much work. So that's step one. And then from that, if they actually appreciate this is a reasonable quote, they can just drop credit card, debit card, and purchase instantly. And really, end to end, it took less than 5 minutes. So, again, the old way was just a very difficult, long process that most clients didn't either begin the process because it was too hard, or abandoned it halfway through because I'm not sharing all this information. I just want a quote.
Okay, I completely understand that part. And since I know you're working in as mentioned at the beginning, it's a tech company currently that you're building, and of course we talked about the traditional market. So I'm assuming you're also using a lot of predictive analysis in the system itself, right? So right now, probably predictive analysis focus on streamlining quotes. But where do you see the general app having the biggest impact on group benefits in the future, especially in your area, this field?
It's a good point. Yeah, I mean, the current model really is the front end, so to speak. Before I answer that, another win that we have is that by having this automated quoting process, all other insurance companies, the way they quote is very manual. They have actually a staff employee that actually has to go in and actually create the quote. So we've eliminated that staffing issue, which we could pass on those savings to the client. So that's another big win. But to answer your question, you said about where the future is going with predictive analysis, AI. I think the next level would be to do instant adjudication. So what that looks like is, if there's something that is not maybe the normal medical expense that they would have submitted, like a dental, maybe it's a specific drug or specific thing they want covered, and it's not normally approved, they could submit that request and have our AI system automatically adjudicate that, either approve it, check their medical records, check the government website for, is it an approved medical. So having that instant adjudication would
Mhm.
probably be the next level. And we've looked at that already, and we feel that we can actually build that where a decision could be made instantly, where now it takes, probably a couple of weeks to get that response.
So that would mean personalized group plans based on just the real time,
Very custom.
real time company data.
Exactly.
Okay, and with you automate uh, much of the quoting and pricing process, but as I remember that, and I mean, as I know, the insurance has traditionally been a very relationship driven industry. I have my brokers. So how do you like balance automation in your platform with the role of the human advisors, or you just completely don't care about this aspect? You want it to be automated.
No, I mean, I've been an advisor for 30 years. I would not, build this to eliminate that relationship. I think that's a very important relationship. Even though we've simplified it, this group benefit still has a language that's specific to that industry. And, maybe some clients wouldn't be comfortable designing their own quote, even though we have simplified it. The way our portal is set up, it is a custom portal by advisor. So meaning their agent code is built into the site. So even if an advisor or an agent sent the quoting portal link to their client, the client could run the quote themselves, but all that information is being tracked by the advisor. It always goes back to them. Okay. So they're
Mhm.
always in the loop. Okay. And ongoing support is something that is always important because, clients are going to ask, how do I submit a claim? How do I do that? How do I do, right? So having the advisor involved is very important. Now, having said that, we also have a client service team that we put together to help service. So advisors would have support from our own Viber service team for ongoing support. So yeah, so definitely the advisor should stay involved in this relationship.
So that would just help the insurance brokers. I mean, the insurance brokers, they will have like a role, right? So it's rather to simplify the process that they're already working on and provide more value to the customer, right?
Exactly. I mean, the kind of brokers that are gravitating to Viber, there are definitely advisors that have been in the industry a long time in the group benefit space.
Hmm.
Those ones, if they're very busy, working with a client that's under 10 employees, 5 employees, it takes just as much time often as a 50 employee group.
Hmm. Hmm.
And, obviously you're going to think they're going to want to spend their time on the 50 employees. So, this model allows them to provide a great level of service for those smaller clients. Okay, that's
Right.
one. Also, advisors that are new to group benefits, there's a lot to learn in the group benefit space. This model with Viver simplifies the quoting and the sales process so that a new advisor can get ramped up much faster.
Essentially allowing it to scale faster and scale their clients base and sales. So I want to talk about this as well. So scalability, I mean, of the company itself and the expansion, and in general some industry challenges. Because I know you're currently operating in Canada, right? But could this model work in the US? Since I know that these are different insurance and benefit models that these countries operate on.
I think so. I mean, the tech itself, I think, is unique enough to be transportable, obviously, to other countries. The product itself is very regional. I mean, we're a regulated product. Obviously, Canadian. Actually, even by each province has their own regulator, so we actually have to get individual licenses by province. The U.S. is the same. Every state's got a different licensing, so we'd have to do that. Canada has medical healthcare, so our plan sits on top of that. The US is obviously a little different. So those kind of product differences would have to be worked on. But the technology itself, it can easily transport to another country.
Could you describe some learnings from this path? We have a lot of companies listening to us that are, they're also fighting with the regulations. So how did you do it? What was your learning from this period of when we applying for different licenses?
The first step was, I mean, to actually launch a full insurance company is a big deal, is a big ordeal. So what we decided to do for the round one is to partner with a reinsurer. So what we did is partner with a major Canadian insurance company, Cooperators, top 10 insurance company, and they actually underwrite our risk. So that actually helped us skip a few steps. So we didn't have to apply for a full insurance license because we had a reinsurer. So that was our solution to that licensing issue. Otherwise, yeah, to actually launch a full insurance from day one, not just the money, but the time to actually do that would have been quite overwhelming.
out of my experiences, it's just pretty hard to convince traditional insurers to
Yeah.
just like embrace digital, right? And the group benefits industry has relied on this manual processes that you just described, by the way, for decades. So how do you address that? I mean, how do you address skepticism from brokers, insurers, employers who are hesitant about automating that?
We definitely had some pushback, both from insurance companies and brokers. Some of the, prior to, partnering up with cooperatives, we did approach a few other insurance companies, and either they were too small for us, they didn't have the data set we needed, or the larger ones would, try to educate us, saying, that's not how the industry works. And, I kept pushing and say, well, but what if we could do this? What if? And finally, Cooperators was open to listening and seeing the potential. In fact, they actually have a tech incubator in-house. So they actually are quite innovative themselves for an older established insurance partner. And then also on the broker side, we've had definitely some brokers that push back to say the value of what we provide is the broker. I said, I got that. And I'm not trying to eliminate, the agent. I'm trying to provide some tools to simplify the process. You should still work with your clients. And now you just have another quick, easy product. And, especially if you want to do a quick test, imagine that advisor sitting with their client and they say, hey, can I just do a quick check to see if your rates are reasonable? They can literally just hop into Viber, run a quote in 2 minutes, bang. They don't have to sell us, but at least they, in minutes, they can, give them an idea of what the premium would be.
Mm-hmm. And what other objections or like common objections the industry has?
The other thing from a broker perspective is, how could a quick issue product be the end all be all to all clients? And we're not professing to do that. Some clients are not going to fit Viber. And that's okay. We're just another product. I still think a good agent should shop the market. We're just another option, right? Look around. But, we are a solution that has to exist. Every other industry has instant issue this, instant issue that, a quick issue. Group benefit hadn't done that yet. Or you can get life insurance quickly. You can get car insurance, home insurance, right? But group benefits still was stuck in this older model. So whether we did it, someone would have to build an instant issue group benefit product. It was going to happen.
Mm-hmm. Yeah. And with the, let's say, I mean, scalable or like scaling the partnerships or like the rather client base, I know most of those are enterprise level organizations. So I know the process there is just hard, it's long, it takes either, I mean, that's the question, like what does it take? Is it a network because you've been working like in the industry for 30 years or rather some particular process? I mean, what's your secret sauce in this regard? I know everyone are talking like about getting to enterprise or just trying to work with enterprise level clients, but what's your process for that?
That's a good question. I've been an entrepreneur most of my life. And so I have learned a few things. And I think that the real secret to success is not having deep pockets or a great idea. Even a great idea isn't everything. It's really, who do you know? It's really connections. For example, we wanted to partner with a major insurance company. It's not just picking up the phone and calling all the insurance companies and say, hey, can we meet? It's asking, okay, got it. Step one, who would be the type of insurance company that I want to partner with, right? What are the attributes we need, right? Large, da-da-da-da. Okay, so we had that list. Then we identified a short list of the specific insurance companies. And the third step is, got it. Who do we know that knows someone there? Because we needed an intro. It wasn't just pick up the phone.
Yeah.
A warm intro opens doors. And that's how I've done most of my initiatives. Because I've been in this industry 30 years, I know a lot of people. My partners know a lot of people. So because of that, we said, okay, we want to work with that company. We got it. Who do we know that could introduce us?
Mm-hmm.
And that's how you move forward.
And what about the process itself? Because, there are a lot of decision makers. It takes forever to process, and a contract. And like, do you have any learnings here?
That's what took us a long time, really working with them. Insurance companies have different timelines and how things are done. Our tech partners have different timelines, how things were done. Being an entrepreneur, you want things done yesterday. So that is something I had to get used to, as to, kind of slowing down the timeline, appreciating that now there's different teams and divisions and, and getting legal and accounting approval. And so that was, I would say patience was required there. But, really just the way I went into those meetings wasn't authoritative to say, oh, we got to get this done. It was more questioning. Well, what if we could do this? What if we did this? What are your thoughts about this? So I would just kind of pose questions and let them come back with answers. You got to let people get to the answers themselves, right? If you give answers, you're kind of just pushing your way along, and at some point it's going to break. But yeah, patience was definitely important. 3 years to build this. It was much longer than we wanted.
And yeah, I mean, 3 years but you mentioned you had an entrepreneurial journey, but that's your first or rather first business as a founder in the insurtech health space, right?
Correct.
So yeah, so after the, you just mentioned 3 years. So what were the biggest challenges you faced in launching this particular product in insurance industry?
Step one, the first hurdle was finding a partner. And that probably took the first year to find a strong partner. And in that year, we had other companies that we started working with and then realized it wasn't going well for whatever reason. So we had to switch a few times. So that slowed us down because we had to, find a new partner and then start over. So once we had cooperators, then we can move forward in plan design ideas and having a partner like them that can actually add value in the ideas, as opposed to just, here's what I'm thinking and build it. No, what do you think? And together, collaboratively, we came up with a lot of innovative components of what we created. So, like I said, the step one was just finding the right people to put in the room.
Okay, and after that, what happened once you had a product market fit in a sense?
Well, after that was really understanding, from my perspective, being an advisor for a long time, now having this vision of what we wanted to create, but then having the reality of an insurance company saying, well, here's how underwriting works. Here's how pricing works. And, we all have an idea of how things work, but then once you get into the granular components, now you're really learning about how things really work. And so there was a lot of learning of what's possible. But, I kept looking at those things to say, okay, got it. I understand how it works. But what if we tried this? Would this work? Right? And I kept just asking questions that may not have made sense, but at least they were open to the conversation. And sometimes it would end up with, let's say the cooperators, their pricing actuary. Okay. I would suggest something and he's like, I see where George is going. Let me test it. I'll get back to you in a few days. And he would come back and say, yeah, we could do this. So together we explored how far could we push things. Right. And that was great to have them open to what if we tried this? Right. And that's what took a little longer because we kept trying to design it perfectly. I didn't want to launch it, halfway there incomplete. If we didn't go all the way, we would leave the door open for somebody else. So we really want to keep pushing and pushing. And, a few times we pushed off the launch date because I felt we could do better.
Okay. And with you mentioned some of that, but it's quite interesting. With the regulatory approvals, what was the hardest part of it?
Well, the regulatory side wasn't actually too bad because, like I said, because we partnered with cooperators and they're already a licensed entity. The only area that we're encountering some resistance with regulatory is actually one province, Quebec. So Quebec kind of does things a little differently than most of the country. And so Quebec has actually introduced regulation about online insurance sales. Okay. And with that, they have specific requirements that all the other provinces don't have. So now that we're trying to, get into Quebec, now we're having to make some adjustments on how we present our quotes, how we present our presence online to fit in with these regulations.
You're bootstrapped or VC funded as a company?
To date, bootstrap. Unfortunately, it's all our own funding, which is a lot more than we expected. So no, we have not had any VC yet. We have spoken to a few, but we haven't taken any money yet.
Was it let's say, a decision that you made that you want to have traction on your own with your own funds and then raise money?
Yeah, I mean, to this point, there's 4 partners. Each partner is financially sound. So we decided as long as we can maintain funding it ourselves, debt-free, no loans. Let's maintain it as long as we can. We do foresee we will need some funding to accelerate our growth. But in the beginning, even up until now, we haven't done heavy marketing yet.
Mm,
We knew that as we launched it, maybe we've only been in the live about 6 months.
mm,
So in those months, we knew that advisors would play with the software. They would, break it. They would find ways to, improve it. And so we wanted to give us a little bit of time to make sure it was perfect before we go heavy into marketing. But so now I think we're at that stage. We are going to start, pushing now into more marketing. So I can foresee we will need some funding in the near future.
I want to talk about the future of employee benefits in general, like what's coming next in a sense, because with shifting workforce trends, you mentioned some of them, and then also increasing the demands for the flexible insurance plans, flexible
Yeah.
benefits. What do you think the future of employee benefits will look like? Like what will be
Yeah,
the needs?
sorry to interrupt you. That's a good point. The industry of working that has changed a lot in the last few years. Gig workers, shift workers, is becoming normal. That's just the standard for a lot of people. And unfortunately, that workforce doesn't generally have access to group benefits. So we are looking at a model that is portable benefits, fractional benefits. We've already met with some government officials here in Canada to suggest that. The government sees a need for that. They're willing to back that. So we are in conversation with them to see how they can support us to launch that kind of program. But we have designed a program for that. Now we're just trying to figure out how best to launch it. Because the reality is, it wouldn't be so much that one company buys this for their employees. It would be companies would buy into the program fractionally so that their gig workers could benefit. And then they all these separate companies all contribute to one global plan. So that's the idea. And we have designed that. We're just waiting for a government partnership because I think that would solidify the success of this program.
Correct me if I'm wrong, but isn't that vision slightly not in the interest of the current model of the insurers?
It's different. I mean, the model currently is based on spreading the risk over a group. Okay, that's
Mhm.
why generally most companies are
Yeah.
group benefits is minimum 3, minimum 5. It has to be the entire company, right? If you have a company of 20 employees, but you make it optional, so each employee gets to choose if they participate. Well, if you made it optional, then only that the high risk employees would want to benefit, would want to jump on the plan, which would make the plan increasingly more expensive. So it has to be mandatory. So if we did go down this gig worker, it wouldn't be an optional plan. It'd have to be a mandatory plan, which is difficult when you're trying to offer something to what are in essence entrepreneurs themselves. So how do you sort? Because if you make it again optional, this
Yeah.
would not be sustainable.
Okay, I get it. And what's next for Viver Health? I mean, in 2025, any major product developments? You mentioned that you have some plans for expansion as well. So what's next?
Well, right now, all of the product offerings are underwritten by cooperators. We are looking at bringing on a few other partners for other components. Right now, we're missing long-term and short-term disability specifically. So we are looking to launch that May 1st with another partner. So we will continue to add more coverage, but it's all offered as Viver. Another
Mhm.
innovation we're looking at is an employee shopping cart, where the group benefit is initially designed by the employer, but the employee may decide he wants more dental or more HSA or more other coverages. They could go in and actually purchase their own benefits, drop their own credit card, debit card, and buy their own additional benefits. Right now, if an employee wanted additional, it still goes through the company, and the companies don't want to pay for that. So, they put in their own banking and just buy themselves. So we are building that shopping cart as well. And once
Mhm.
that's built, we can add in investments, pension, like many other line items can get in there. So that's the next big innovation.
And I mean, you mentioned cooperators, and I want to get into the business model and let's say the market impact. First of all, could you explain what a cooperator and how did this collaboration changed the game with them for you?
Well, cooperators, I mean, all of you're present to the size of them. They're, top 10 company in Canada, $10 billion in AUM, very sizable company. We knew we needed a big company, but again, it was about, access. How do we get involved? We're a startup, are they willing to partner with us? And so, we went down that path. We got introduced to them through, a center of influence. Let's say someone we knew introduced us to their executive team. We did our initial pitch, and our initial pitch was kind of lukewarm, to be honest. They kind of saw maybe there's something here, but they didn't see it fully. So they invited more executives, more team members to a second meeting, which luckily there was one particular person in the room who instantly saw the vision of what we're trying to create. And I think we were 2 minutes into that second meeting, and he said, stop. We must do this. This is the future. So thank goodness for him. And since then, now we've built an exclusive distribution partnership with Cooper's that we are their tech arm for distribution. And it's been a great relationship. The other advantage is Cooper's is a strong brand. We get a reputation by association of cooperators, right? Obviously Viver is a new entity. Having that partnership gives us credibility as well. It's huge. So yeah, no, it's been awesome.
Yeah, and let's say their data contribute to your risk assessment process. Is that correct?
Yes, definitely. Yes, they already were in the group benefits space, so they had existing data that we could analyze. So currently, our data set is based on cooperators. We are looking at there's another company that has data set from multiple carriers. So we're potentially looking at using that broader data set to see if it changes our pricing assumptions.
You have a lot of experience with working with major players. So what would be the advice you would give to other, startups looking to secure those kind of partnerships with bigger industry players?
So I learned this, and I mentioned it earlier, but I learned this years ago when I had another company that I was trying to launch, and that company was called Camp Millionaire, which was, teaching kids about investing. It was like a school. Right. And I identified at that time to launch that program, I needed to have classrooms, physical spaces. I needed to have teachers, and I needed to do a lot of advertising to fill the room. I said, oh my God, so that's a lot of expense starting out. This was about 15 years ago. So I identified a specific college that already had summer camps, already had teachers, already had advertising. They already had everything I needed. They were the ideal partner. So I called them up. I said, hey, I want to work with you. And they said, nope, we don't work with vendors. Click. Right. And that's when I started thinking, no, this is my partnership. They don't see it yet. So that's when I started asking my friends, business acquaintances, everybody I know, say, I need a meeting with the dean, like the highest school. Who knows the dean? One of my friends called me up and said, hey, I know the dean. He's a good friend of mine. He got me a meeting with not just the dean, but with the person who's head of the programming. And that woman came to the meeting and said, I'm only meeting with you because the dean told me to. That was her first line, but it didn't matter. I was in the room.
Yeah.
And after that, I was able to show her and convince her. And obviously we continued, and we had a relationship for about 12 years up until COVID. So what I'm getting to is that in order to get access to these large companies, it's not just picking up the phone. It's who do you know? I'll give you that warm intro, not a referral, a warm intro, which looks like a warm email. Let's do a joint meeting, a lunch. You got to get that access, because if you have that warm intro, the credibility of that person that gave you the intro, that credibility passes on to you.
Yeah, that's true. That's true. So
you got to be someone who is credible, who is referable as well. Have a strong reputation, because if you don't, others don't want to refer you. So that's going to open doors.
Get in the room first, and the network. I mean, I like it.
Right. And the other part of that too is to always to start from 3 layers is the way I kind of look at it. Don't just try and get in with the president, right? Get access to the president, get access to a secretary, get access to a VP, get access to different staff members, get the company speaking. So by the time the president hears about you, a VP has mentioned it, staff members, I heard about it. Everyone's talking about it. So it becomes this thing that by the time you connect with the president, he's already heard about you.
Yeah. So build a momentum around it. Yeah, sure.
Exactly. Right? Yeah.
Mhm. I like it. I like it. And for those of, let's say, potential advisors or partners where's the best place to learn about Viver?
Well, our site is very simple, viver.ca. When you go to viver.ca, it has a lot of good information about our company, our product, our offering. Right on the main screen, there's two buttons. If you're an advisor, you can just hit advisors register here, and it'll guide you through the process on how to get your own custom link. And if you want a quote, if you're a client, you can hit the get quote now, hit that button, and very quickly you can have a quote as well. So it's all built right into that site. We're also looking at building an affiliate program. So we've realized that, the industry these days is affiliate linking, affiliate marketing, but insurance has never really been conducive for affiliate marketing because insurance is regulated, right? And you need a license to do that. But we've looked into this a little further, and affiliate marketing, what it looks like is providing a referral to say, hey, here's a company you should look at. So someone that is not even licensed, but maybe has access to business owners can now refer them for group benefits by just saying, here, click this button for group benefits, and they come to us. When they come to our site, there's a button that says, if you need advice, click here, and they get redirected to our Viver advisors. So that affiliate cannot provide advice. It just provides the link. So yeah, that's coming. It's another innovation that's coming. It'll be the first group benefit affiliate marketing company.
Thank you for sharing that. And George, thank you so much for joining us today.
Perfect. Well, thank you for inviting me. This was great.
Thanks for tuning in to Keep It Healthy, where we explore how technology is transforming healthcare. If you're building in health tech, visit our website to download our MVP development playbook. The link is in the show notes. Don't forget to subscribe for more conversations with the people shaping the futures of care. I'm Jan Kamiński. See you next time.